Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market swung widely last week as the cross currents of the news of the Omicron variant, a much more hawkish Fed, and favorable seasonality pushed the markets in both directions. And that left the major indexes with small changes to the downside, but damage was done in a lot of individual stocks. After last Friday's deluge of selling on that first Omicron news, on Monday the market moved up very quickly. S&P's up 72 points in the morning as scientists said that the virus was less intense than Delta was. And President Biden said, no need to panic. Tuesday, there was a big downside reversal, however, as the Moderna CEO warned that the efficacy of the vaccines may not be good enough for this new variant. And the big negative was Powell and Yellen, their testimony before Congress, and Powell coming out and saying, economy is strong, but inflation is high, and a faster taper may be warranted. And he removed the word transitory, basically saying it's time to retire that word. But what he didn't say was that every time he used the word transitory, and every time all of his cohorts did, they were wrong. But they won't admit that, of course. So transitory is no longer in the language, and it's been stricken from all of the dictionaries, as I understand. Wednesday, we saw day 2 of the testimony, and Powell was really tough on inflation. He said, and very interestingly, the Omicron variant is a cause for more problems for inflation. We're so used to hearing that the virus brings a lot of stimulus that really did scare the markets, as they're now focusing on the effect of the virus on supply side. And the supply side is what they believe is causing the inflation. Of course, not at all, owning up very much to the fact that they printed money at such an unbelievable rate that now people are suffering from that inflation, and that is never coming back. Yellen, well, she gives this horrible double talk, and I gotta tell you, she is scary. I mean, she is the queen of MMT, and the fact that she runs the Treasury, well, that's one of the scariest things that I know. News came of that first case of Omicron here in the U.S., and then the market headed lower on Wednesday. And then Apple came out. Well, I don't know when they told this news, but they kind of said it to their suppliers that the iPhone sales were slowing, and the stock reversed to the downside. But nobody seemed to really know why for a while. And then later on, after the close, it became pretty clear. The S&P 500 on Wednesday was up 87 points in the morning. Then it was just another one of those days where the bottom pickers came in. They think, well, seasonality, you got to buy them. This is a bull market. They're going to do highs. And then it reversed, 87 up to 57 down in panic selling. Well, that's the biggest reversal in memory as far as points goes. Thursday, well, we had another round of buy the dip. And another report that Omicron had more mild symptoms than many of the other previous variants, and there were many cases that were actually beginning to get reported in the U.S. Then Friday, the employment came out. That report was, well, the number was horrible. 210,000 jobs created. That was a huge miss compared to the expected 550,000 jobs created. There was some seasonal adjustments in there, and there was a pretty good 100,000 plus upgrade in previous numbers. These numbers are not reliable. What is probably pretty reliable is the U3 unemployment rate fell to 4.2%. There was a time when 5% was considered full employment, but when the Fed was pouring all of the money into the economy in the Great Experiment since 2008, they managed to get it down to 3.5%, but that was because companies were making money based on interest rates at zero. Imagine what happens when there's a normalization of interest rates. Well, the company's earnings are going to plunge when that happens, if that can ever happen. U6 was also a big drop, and that was down to 7.8%. The news pretty much was mixed, and I didn't think that would change the Fed, their attitude at all. Well, the stock market tried to rally. It was up 30 points on the S&P 500, and then all of a sudden sellers came in. There's got to be fear about the reports over the weekend of what Omicron is really going to look like. There is a report out from South Africa that one city or village that's pretty ravaged by it. There are 100 children aged 5 years and younger that are now in the hospital from the Delta variant. So I don't want to spread false news. I just read that report. It may be anecdotal, but it really was scary news, and maybe that's what sent the market down from up 30 to down 50 on the S&P 500 as I am doing this report now at around midday. So the stock market, well, it definitely hit a bump. And the past couple of weeks, I keep hearing from viewers and social media and professional analysts and all of them that you can't top until there's a blow-off top. That, okay, we're pulling down, it's a correction, and we've seen this happen so many times. But then what happens is that the market goes back up. Buyers keep coming in, and of course, the buyers did have plenty of fuel to push the stock market up for some significant period of time. But I want you to see this slide right now, and you can see this is a very interesting picture of inflow into equities. They have exceeded the combined total for the past 19 years. In other words, the last 12-month flow of money into equities and equity funds has exceeded the whole last 19 years. This is unbelievable. $1.1 trillion since, well, it was the end of 19 when that low, or the low came in 2020, when we had that massive upside move in this very, very significant place for money to go. And it just shows you how, they had nothing to do with the money, so they kept pouring it into stock funds. This is the investors pouring money, and thanks to Bank of America Global Strategy and from Bloomberg, who put this out, it just shows you the nuttiness of all of the money that went into the stock market. Now you can see how much they pushed in, and it's starting to tick down right now. What does that mean? Well, it means to me, investors are all in. They've gotten all in. And with hundreds of thousands and millions of accounts that have pushed all their money in because there's nowhere to go, now you know why the stock market is acting like it is now, with some stocks getting absolutely destroyed. While the indexes are only down about 4 or 5%, well, the Russell's down about 13% from its all-time high. So there is this situation where there's, I believe, all in. There's no more money to go in, and that sets up a very, very rough time for the stock market moving forward for months and maybe coming years. While we see this really tough situation where all that money is already pushed in the market, our analysis still shows that there could be a rally into Q1, but blow off, that's done. And when that happens, we think that, we believe it will happen with buyers coming back into the early part of the year, maybe February, March, where that peak comes in. I don't think it's going to be a significant new high in the market at all. Everybody's expecting a Christmas rally to come. We thought it would be a very rough December. We have been talking about that. And now buyers all in. It's going to be really hard to get a lot of upward push going. We kind of think that this Christmas season is going to be just a very choppy period We're looking for a low to come in the market in the next week. Talk more about that towards the end of the show. And then we think that the Christmas rally is just going to be a lot of continued very, very wide swings, maybe a mild upward bias for the last couple of weeks of the year. But overall, we think that we have seen the best of it for this bull market, and buyers are all in. For the week, the stocks, well, wide swings, small changes, indexes down, most of them down less than 1%, but some stocks are absolutely buried. Take a look at DocuSign, Smith and Wesson, Etsy, Square, which is now going to be Block, solar stocks, Chinese ADRs. So many of the stocks are absolutely destroyed. Man, from the time we talked about those stay-at-home and work-at-home stocks that were massively overpriced, the vast majority have lost well over 50% from that craziness. And the stock market, well, it's only holding up because of the mega caps and techs. It could be down much more, and it probably will be down much more as we look out at the next 6 months out there. So the tech sellers, they're starting to come into the market. And that's because they've been hiding in there, and when they realize they've got to sell, well, you're going to see those indexes come down and come down sharply. Bond market for the week, well, 30 years gain about a point, 10 years lose about 4 basis points. As a safety bid comes in, we believe that the last couple of weeks of the year into February is a very risky period for the bond market. And we think we're going to see rates going up during that period. Watch for our big picture analysis, and of course our members can see that in our Future Speak show and in our live charts. Gold, it's a third week down for gold and silver. Gold down over $20 on the week. Silver about 80 something cents. That's a 13% decline in just 3 weeks for silver. And I'm going to give you a big picture analysis coming up in silver. The dollar up about 0.4. Actually, the yen is stronger. The safety bid seems to be more coming into the yen than it is into the dollar. And oil, a $9.50 range this week. Right now, up about a half a buck. The OPEC Plus was a big surprise. They left production increase in. Everybody thought they would cancel it because prices fell. But nope, they didn't do that, and they left that in, and that is part of the reason that you had that really wide range. We think that we're going to get a rally back in the oil market modestly. And again, our Future Speak show and our charts have those levels that we think that oil will stop after it gets a rebound. So please do make sure you tune in and become a member. What's coming up for the rest of the show, some really good stuff. We're going to get a preview on our international markets member video, and RV is going to bring you that, where he looks at at India and Mexico. And we're going to look at a big picture conditions of the silver market, and I'll talk more about why I think you can't look for any runaways on the upside in silver for a while. And then I'll bring you the S&P 500 and the Russell, a look at those at the end of the show. I want you to go to the askSlim site. Go there right now. If you've never been there, I think you'll find it fascinating. And you could become a free member, or we have tremendous specials going on now I'll tell you about in a few minutes. If you're on YouTube, please do subscribe to this channel. Click that notification bell, and they'll let you know when we put a video up. And do like this video. Give it a thumbs up. On Twitter, follow me at askSlim. And if you want more information on our memberships, our holiday specials that are just mind-blowing, any questions on our huge offerings of education and analysis for traders and investors, write to Matt at askSlim.com, and he will share that with you. All right, so we're going to look at a preview now of the international markets. This is some work that RV does. RV, one of our now 4 analysts that we have on staff, cycle analysts that bring you this rare style of analysis. You're going to find this fascinating as he brings you what are positive conditions and potentially a good opportunity in India and maybe Mexico, which doesn't look quite as good. So you're going to see this great analysis coming up by RV.
So this is the Nifty 50 and a very interesting pattern setting up here as well. We did see that high form and then we got this rollover back down. Now the overall context that we have been looking at this name in is that we're really looking for a bull flag here on this weekly time frame and for this to turn back up. So this is, we haven't really been very negative, really just looking for a buying opportunity here in the Nifty 50, and it does look like we are getting one right here. If we go ahead and shift over to the daily, you'll see what we're looking at. I have modified this, really shifting this to the left to line up with this short-term low that has likely just formed. If I zoom in a bit, you can see that we have a negative slim ribbon still, so we do need to see that neutralize and then turn positive. But you can see this nice upturn already happening here in the Nifty 50. Now, if a weekly low has just formed, this will likely give you a nice impulse on the upside. So that is something that you would want to watch for if you are looking to the long side in the Nifty. On the upside, it is reasonable to see in this short-term rising phase, at the very least, this move to the intermediate 61.8 to the 78.6, so that's 17.916 up to around 18.214. So a solid pattern here setting up in the Nifty 50. If we go ahead and shift lastly to IPC Mexico, so this was a very positive pattern that has then had a very modest rally, as we noted here back on 11:10 at the time of our last video, a very modest rally here in this rising phase, and now a breakdown below that key weekly low. Our next low is only due out in the spring of next year. We also have negative weekly momentum, so as long as we hold this, what is called a left-hand translation, where the high forms early in the cycle, then we're in this corrective phase for the rest of that cycle. We will look for rallies to really fail, and then for this to rotate back down to this intermediate 78.6 around 47.887. If it gets through that level, the next level down is 46.385. So that's really what we're looking for here in the IPC Mexico, a name that we have been positive on for many, many months that we are now bearish on. If you go ahead and shift over to the daily, you'll see that the daily cycles here, we were looking for a bottom to form. That bottom likely formed a little bit late. As you can see, we were looking for a low around here. The low actually formed just about 1 week or so late, and that is a negative warning. And then we had a modest rally and then a quick turn down. So as long as we hold below this daily cycle high at 51,236, we are in a left-hand translation here, and we look for lower prices. You can see this tried to rally and then has already failed back on the downside. So watching for this to get further movements back on the downside to this short-term 100 at around 48,692, and the short-term 127 is around 48,000 even. So that's really what we're looking for in this short-term corrective period, which goes out into right around Christmas time. So that's the overall picture here in the IPC Mexico. Risky pattern and likely lower prices ahead.
Great work, Harvey. The analysis that you just saw, of course, is cycle analysis, and he did a great job teaching around that. You can learn so much more about cycle analysis by becoming an askSlim member. Or if you want to give the gift of askSlim to somebody that you know would enjoy it, please do watch for the special that I'm going to show just in a few minutes. Right now we're going to look at something very different, and we have lots of questions on the metals markets always coming in. This is big picture analysis of the silver market. Lots of people have been saying to us that silver is going to explode, and we read that all the time, that it's going to go through that $30 number, and then it's going to $40 or $50 or even $100 an ounce down the road. Well, we actually, for the long term, it makes a lot of sense that we're also bullish on silver. But we don't want to get caught in what we think is a period of correction that's going on that happened for many, many months and is really likely to continue into the middle of next year. And I'm going to show you why as we look at multi-time frame analysis, looking at silver on the weekly and daily. And then I'm going to take a peek on the shorter term, our live charts, for you to see the present conditions in the silver market. Let's start out right over here. We're going to jump out of this and put up / SI for silver. So what I want you to see right in here is we look at this big move that happened after the pandemic. Silver had fallen during the pandemic from around 19 all the way down to under $12, and then rallied very, very quickly up to the $30 number. These, of course, are cycle brackets on the bottom. These are the way we can see the rhythms, the heartbeat of the market. There is a repeating pattern in here that when you get to the major lows, it's in a troughing area of the cyclical pattern. These are money flows. So what we look for is the dominant money flow, which is this larger semicircle on the bottom, the cycle bracket, and we look at the minor ones right in here. And the gold one right over here is the minor gold one that we compare against that. So where are we right now? Well, we saw this cycle actually bottomed where it should have, right over here, and dominant and minor cycles were pushing up, and you got the rally, and it made a double top. This last failure up there we were very cautious on because that was the Reddit people that were pushing up silver, but they couldn't pull that one off, as you could see. And then we got into the minor cycle, and this even extended long, and it gave you a little shift in here. That is when you get this negatively configured cycle, and you see this downward pointing arrow here, negative cycle config. That's a left-hand translation for those of you that are students, and this is from the downside pressure on the monthly chart that I'm going to show you in a few moments. Now, when I get a little closer look in here, you will see that this last low right over here came as it should, and you get this big rally, and then it hits these resistance areas and it backs off very sharply. This was a 13% drop in just these last 3 weeks, and the key thing that we're looking at here is that it gave up more than the 78.6% retracement level right there. When that happens, the probability is high that it's going to rally and fail again. A rebound makes sense. Also notice this is our momentum indicator. That this is called the Slim Reversal Scout, askSlim Reversal Scout. And when it turns over, as you can see right over here, momentum conditions are such that you're likely to have a decline through the next cycle bottom. In this case, there's a minor cycle bottom over here projected out into February. And then there's another long one over here, and if I just highlight this, you can get the date on there. That points out to the end of June. We believe that this long-term correction that we're getting now after this big move is likely to take you out into the summer based on what we're seeing in here. And this downward turn in momentum and this move down below the 78.6 tells you of the pressure that is coming in from the monthly pattern. Why don't we look at the monthly pattern, because this is a big picture analysis, and I'm moving that in here right now. And I want you to see the magnificence of these patterns. Those yellow areas that you see are when you get into the final stage of the corrective phases, and that brings you into these nested cycle areas right over here and here and here. And we're in that right now, as you can see. Now that weekly chart pointed out to a decline, which takes you out into June. This right over here shows you the nested area, which is basically April through September right here, which says that's really where that bottom is likely to come, April through September. So the reason that we're getting the correction is because the monthly pattern is in this corrective area. The monthly momentum turned negative right over here, and it has been pushing on the downside ever since. So the silver market is in a condition where the monthly patterns that you see right over there, and the weekly patterns that you see over here are all reflective of the long-term pressures that exist in money flows in the market. This says that silver is very likely to continue down into this monthly period, which points to somewhere around June 22, plus or minus a couple of months on either side of that, based on the normal variances. Not a good picture at all for the silver market. Let's just take a look very quickly at the askSlim chart streams These are our live charts that our level 3 and 4 members get, and if you take the gift membership I'll show you, you'll be able to get these also. I'm going to go down here to silver and click on that, and I want to bring up the live charts with our proprietary indicators on there so you could see the multiple time frames and the conditions that we're looking at right now. So what we have are 4 different time frames here, and this is silver weekly, this is silver daily, this is silver on the 2-hour, and this is silver on the 15-minute. Now, the 15-minute shows that silver just had a pretty good upside jump in the market, but that's just a little tiny move relative to the length of these other charts. What's very significant to see is that momentum in here turned down, as I showed you on the weekly chart. Momentum on the daily chart is coming down, but there is a bottom that's due in here, and we are likely to see a rebounding period coming there, and our members will soon see where the resistance is there. And you can see here on the 2-hour chart the slim ribbon right over here as it moves down, and that has been showing you the momentum and driving it down. Slim ribbon PO is the signal indicator, and that's where it gave you a bearish resumption. It was absolutely perfect when you look at that. And our option bias indicator way on the bottom left over there is showing you an N3, and that's going to keep getting dark, so I can't point it at anymore. And that shows you the most negative condition that you can have if you're an option trader and you want to adjust your biases. That's all negative. On top of that, the market condition indicator right over on the bottom there has crossed down through the swing zone, those 3 middle lines, and now is trading down at around at around 20. It's also very negative condition. Everything we're looking in here are showing us negative conditions, and this big bounce on the 15-minute chart right over here is doing it at a time when this reversal scout right there is pointing down, and that's even likely to struggle to be able to move up until you get some improvement in here on the 2-hour chart. So when we look at this multiple time frame analysis, all of our proprietary indicators, it basically shows a condition such that this has work to do to really give you any kind of a short-term bottom. It probably will do that, but it will be fighting against long-term money flows that are pointing to the downside, as illustrated on the weekly and daily charts here. And our option bias indicator and our momentum condition indicator. You can have all of this live right on your computer. You don't need any special platform. All you need to do is become an askSlim.com member, level 3, and you'll be able to get the live chart streams, and you'll be able to have all of these symbols live, the 6 different symbols on the stock market, gold, silver, the TLT, the 20-year XLE on the energies, and our SIR intraday, which is all the 15-minute charts for intraday traders. It's unbelievable information. And that is available for level 2 members. So wanted to show you this, show you the condition of the silver market as you look at that. Here is our main page, and I'll come right back to that in a moment. So that's a look at silver. Really, the sum of the evidence as we look at that says that silver is going to struggle for a long period of time. There are indications on the short term that you will get a bounce. That bounce is not likely to be able to hold. We don't think any bounces are going to be sustainable until the late spring to summer of 22. The downside target is around 2070 on the downside, but based on the patterns, it could get as low as 1880. Silver in a longer term corrective period, and I just explained to you why. This is the askSlim annual holiday special. Great holiday gifts for traders and investors. Give that gift of askSlim. This is a rare time. It's our special rates. It's the lowest rates that we give of the year. And this is for 3-month memberships. And what's unique about these is that they're non-recurring. We do that so that you can give the gift of askSlim and not worried about being charged again. You can give that gift to someone you know who loves trading and investing, or give the gift to yourself. It's great for first-time members or for our present members that want to upgrade for 3 months and take a look at what that upgrade looks like. And if you do that, if you give this gift of askSlim to yourself or someone else, we're going to send you a gift. It's a bonus gift that is an Amazon gift card. The purpose of that is to kind of, pay you back and help you to pay for part of this gift that you're going to give. This is the only time we ever do this of the year, and it's really a great opportunity to learn about askSlim.com. I'm going to just show you really quickly what is included in that. We're going to go to the main page here on askSlim, as you can see, and what I want you to do is to see right on the top over here our annual holiday specials right there, our best deals of the year, and right there is that save 30% or more, that green box. I want you to click on that, and you will, when you do that, it will take you to the holiday specials right here. There are 4 of them that I want you to see. You can give the gift of a level 2 membership to yourself or to anybody else, and we're going to send you back a $20 Amazon gift card. This is not a very expensive level that we have. If you take a level 3, which you're going to get all of that great content I just showed on our live chart streams, you're going to be able to give that, and we'll give you a gift card of $50. For level 4, we'll send you a gift card of $100, and level 4 plus, which is our really top level where we interact a lot with those members, and you can ask us for a couple of custom charts a week, and we'll do that work for you. We'll help you with your own work. All of that, we'll give you a $150 gift card back if you give that gift of level 4 plus. All of this includes our massive library of videos. More than 500 videos, maybe it's 600 plus. There's so much teaching that we do in there in 10 different categories of videos. For traders and investors, you can barely go anywhere for this type of an educational opportunity. So it's a fantastic time of the year to be doing this. Give that gift of askSlim, and I think you're going to be really pleased that you did, whether you gave it to yourself or you give it to somebody else that you really care about, that you know wants to learn more about the markets. I'm in this for 47 years. We have 4 incredible analysts that do teaching all of the time, and I think you are going to find it just astounding. So please do give the gift of askSlim. Let's look at the stock market. We're going to take a look at the S&P 500. I'm also going to add in the look at the Russell in here as we look at our multiple time frame analysis that we do. We're going to switch over here. I had the silver chart up. I'm going to go to SPY and show you the conditions that we have in here in SPY. So this is the intermediate chart. This is the S&P 500. It was only a few weeks ago that I was saying that we're in the area of resistance for this market, where there was really a wall of confluences up there, and we were likely to get a decline. That was something like about 4.5% to 6% that the S&P 500 may lose as much as 250 points, which would be about 6%. Now what we see is that it is now down about 220 something points, so it's gotten really close to our objective. Just take a little bit more of a look at this big rally that we had in here. When you get these fantastic strong conditions where the cyclical periods only give you a small window of declines, as you see 1, 2, 3, and 4 of them right in here, you have a condition where the money flows for the long term are extremely positive. And that's what keeps these formations so positive that we have in here. And the formation that we have right now is very positive when we look at this. It's in this area of minor supports and intermediate supports. We thought it was possible that it would get down here to about 445 on the SPY. It does look like it's going to do that. If it really wanted to get a little panicky, you see this 34-week moving average coming up, which tends to be kind of a magnet for it, and that comes out to the 61.8. That's about 440. Our short-term analysis is suggestive that this decline isn't over with. and there are a couple of opportunities for lows. One comes out to the December 5th to the 11th time frame, and one of them is out in the first week of January. So we could get a minor bottom, we could get a rally, and then another sell-off into the beginning of January before we get into this more favorable period. Now, if you caught the beginning of the show, we said that we thought that investors are all in, and I showed a chart on that explaining that. While we think that there's these formations really speak to the fact that we will take out 473.54 on the upside, you can see we do not expect that it's going to take it out by much. And what will happen is that come out here in the late winter and spring, there is a lot of susceptibility to downside in the market. So we're really taking an intermediate look in here for the next 1 to 3 months as we look at this, and this really looks to us like we'll see a low, we'll get a Christmas rally that doesn't look very good, very, very choppy, and then sometime maybe in January we get an upward lift from whatever low we get in here to this period of testing. We think in the top of the market where you get a little more complex top. Most bull markets are complex when they top, and you can see our projection way out over here because we think that 2022 is a bear market year. So while we're getting these positive formations that you see in here, the likelihood is still that each of these cycles and the next one coming up will give you a higher high. It would take a very large decline right now, which is not likely in this holiday season for that to happen. For the S&P 500, the conditions are for the intermediate term, momentum is positive. You can see the momentum indicator right in here. The cycle pattern is positive. It's still giving you a bullish configuration in here, well above this low over here, though there would be a lot of danger if it got that low below 420. That would give you an indication the top is already made. The phase that we're in now is a declining phase in the market right over here. It's declining or corrective as we are in a correction. We use the word correction differently. Correction to us doesn't have to be 10% or more. It has to be in the proper phasing that we look at in our analysis. And on the short term, well, it got downgraded because momentum went down to neutral. Important supports were broken. Cycle pattern, therefore, is negative, as you can see. The phase is declining, and that next trough is December 5th to 11th. So in other words, we're looking for a short-term low coming next week. And then we're looking for an attempted rally, but it might give you a feeble or choppy rally throughout the rest of the year, with some risk of coming down and testing or taking out those lows in the early part of January before we get into this more favorable period. Now, I want to switch to the Russell because there is so much damage underneath this market that I want you to consider. The Russell has done some damage in here. The decline in here is 13%. It gets under that 78.6%. And the configuration of this is suggestive that it will rally, but it will struggle in the resistance zone that we have put in right there. And that's what our projection is, that in that period in January, maybe into February, that it'll be able to rally with the market. But this really looks like that the bottom tier of the market is in a lot of trouble. Also, while the S&P 500 momentum is still positive, we have a negative turn in momentum in here, which is negative. So the Russell is much worse. Let's just look at the conditions that we're looking at in here. I went out too far for you to see that. And bring this right over here. So the Russell 2000 conditions, the intermediate term momentum is negative, as I showed you right in here. Cycle pattern is still positive because this low is still above this low. However, it is neutralizing because it got under the 78.6. If it gets under 27.07, it will declare a bull market peak is in place. And it is not that far from that right over there that I put in the wrong number, 2107. I'm sorry, not 2707, 2107. Let me fix that because I don't want any people to say, what is that? 2107, 2707, 2107 at this low right over here. That is the breakdown and indicates a major top is in place if it gets down there. That would be about 57 more points, and at the rate that this is falling, it could easily get there. The short-term conditions, momentum is negative. The cycle pattern is negative. The phase that we're in is declining. The next trough is December 6th to 14th. And then again, there's a potential for one in early January. So all of that points to the likelihood that the market will continue to struggle into maybe well into the beginning of the year, with a likelihood of a choppy rally attempt for the holiday period coming up starting sometime late next week or the beginning of the following week, and then probably rallying into Christmas, into that time frame, the holiday season, and then some risk coming out into the very, very beginning of the year to test or take out whatever lows that it makes right now. That information comes off of the short term, which is available to our members that get our Future Speak on Wednesdays, where I go over all of this in depth, of course, also including the NASDAQ, which I'm not going to show to you today. So that's a look at the stock market. Really, the sum of the evidence says that we are in this intermediate declining phase that has basically met our targets on the downside. A minor low due, an attempted rally, and then probably another low coming in the beginning of the year, and all of that pointing out to a test of the bull market peak sometime in the first quarter of the year. That is our look at the stock market. I hope you found it unbelievably interesting and everything in the show. Don't forget to go, if you're watching this on YouTube and only watching this clip, go look at our Christmas specials, that little video that I did earlier in the show. You can give the gift of askSlim to yourself or to anybody else, and it is the best opportunity that we ever offer for you to do that. And we give you a gift back of an Amazon gift card for buying that gift. So please do give the gift of askSlim. I hope you just absolutely love this show, that it has been incredibly illuminating to you, and that you have learned a ton. Go to the askSlim website and become a free member, and you'll learn more about the askSlim if you've never been there before. If you're on YouTube, please do subscribe to this channel. Click that bell. And you'll get notified of our videos. Like this video, give us a thumbs up, and watch our member videos in the playlists and past shows, and you'll get a good feel for what we do. On Twitter, follow me at askSlim, and for any questions about everything that I have showed, all of our specials, all the types of analysis that we do, you can write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.